Yep, it's Robinhood traders that are setting the stock prices. I'm only kidding, but I'm only actually half kidding here. In fact, I wanted to see if there was actually any data around this, and what I found out, hey everyone, Richard here, and today I'm going to show you something that's very important to know about why and how stocks go up and down. But first, please give this video a quick thumbs up because it did take a while to make this and it does really help me out. I remember when I was very first starting to learn about investing, this lesson that I'm about to share with you was incredibly enlightening for me. Mostly because it really just opened my eyes to, well, number one, exactly how someone can make serious money as a stock investor. And keyword there is investor. But number two, really just the secret of how the stock market works in general. So I've got an awesome video for you today and I'm super excited to share it with you. And if you stick with me to the end, I'm gonna show you how to use all this information that you're about to get the most out of it. Okay, so earlier this year, we all experienced the stock market suddenly crash over 30% in like a matter of weeks. There was some serious panicking going on. Remember trying to buy toilet paper when it first hit? People were seriously prepared for some kind of zombie apocalypse. In the stock market, no one knew that this time would be right around when the bottom of the market would start to come in. People were in total panic mode, especially and particularly those who didn't really understand the stock market or even exactly what they were even invested in. To them, they just saw their money just disappearing and they wanted it to stop. For some of you watching this, you're currently using a dollar cost averaging strategy to your stock investing, meaning you're contributing consistently to a low cost index fund or something like that. And you're someone who is, hopefully at least, somewhat mentally prepared for the fact that the stock market can sometimes be a wild ride. But you're armed with the knowledge that the approach you've chosen is a good one and you've got a plan to stay consistent with your regular contributions and not try to time the market. And this is an excellent plan, by the way. It's almost indisputably the best way to go for most stock investors. It's what Warren Buffett suggests for most people, and the research backs it up as well. But even if you are mentally prepared and you've got a plan, like Mike Tyson says, everybody's got a plan until they get punched in the face. All right. Now I want to show you something that's kind of mind-blowing about what, or kind of more accurately, who dictates the price of stocks. Back then at the beginning of the year, and also right now. I'll show you with this little example. Currently, the company Apple has just under 17 billion shares outstanding. Okay, 16.977 billion. So we're gonna just call it 17 billion for what I wanna show you. And just so we're on the same page about what that means, shares outstanding is just how many shares the company's ownership has been divided up into. I know some people get a little confused about this one, so if you're still unclear, I made this video called Market Cap Explained that will clear up any confusion about what shares outstanding means. But let's move on. Okay, so here's a stock certificate for one share of Apple stock. And if you own this, it means that you own a percentage of the company Apple. Now, most people that own shares of Apple won't actually have in their possession a physical paper copy like this, because it's unnecessary. There's a digital record for you, and also you can see in your brokerage account how many shares you own. But nonetheless, take a look at this. What I've done here is, let's imagine that this rectangle represents the entire company of Apple, and each of these little stock certificates within it represent 10 million shares. So therefore, within this rectangle, there's exactly 1,700 little stock certificates that represent the 17 billion shares outstanding for Apple. And by the way, it did take a minute to put all these into this rectangle here, so if you haven't already liked this video, please take a sec to give this video a thumbs up right now. So just to sort of put into context what it is you're looking at here, the largest shareholder of Apple is Vanguard. Vanguard owns 7% of the shares, or more precisely, 1,205,099,413 shares, which would visually look like this. If I highlighted about 120 of these little stock certificates, it would represent the shares held by Vanguard. The second or third largest shareholder is Berkshire Hathaway, and Berkshire owns 944,295,554 shares of Apple, which would look like this once visually represented, about 94 of these little stock certificates. All right, now I'm gonna pull up Yahoo Finance just for a second to show you this next thing. And what I'm looking for is the volume for Apple. And we can see here that Apple's volume for the last trading day was 150 million, and on average the volume is 123 million. And what volume is it's the number of shares that are traded from one owner to another in a single day. So here's what the 150 million shares that were traded yesterday would look like if visually represented, or the average daily volume of 123 million would look like this. And these are the people that are determining the price of Apple. This is so important because a stock's price on a moment-to-moment basis is determined by just whatever the last transaction was for. Even if it's just one share being traded, whatever price it traded for becomes the share price for that stock. And that's why when you look at a stock quote, you're gonna see the bid price, the ask price, and the last price. So these people here literally are the ones determining the stock's price. Okay, and these people are also known as Robinhood traders. Yep, it's Robinhood traders that are setting the stock prices. I'm only kidding. But I'm only actually half kidding here. In fact, I wanted to see if there was actually any data around this. And what I found out was that for a while, Robinhood was actually sharing a lot of data publicly. And so I found this chart. And if you look here on the chart, you'll see Apple's stock price in pink, and the green line represents number of Robinhood users holding one or more shares of Apple. Unfortunately, this chart only goes to August because Robinhood decided to stop sharing their data. But nonetheless, what this chart says to me is that the fear of missing out is playing a major role in their buying decisions. Essentially, what I mean by that is that these investors are seeing the stock prices going up and thinking, uh-oh, I better get in on this or I'm gonna miss out. And they jump in and they buy shares, which in turn causes the stock price to go up even further. And then the cycle of envy and fear of missing out buying continues, driving the prices higher and higher like a constant feedback loop. I'm not saying that Robinhood users are solely responsible. I'm just playing around. But what I am saying is that it does seem like there's a lot of brand new stock investors out there right now. Just looking at this little shot of Google Trends that's going back to 2004, we can see here that the search term how to trade stocks is more popular than it's been for a long time. Here's the term how to buy stocks, which peaked in March and is still relatively high compared to what it's been in the past. And here's the search term best stocks to buy. Pretty popular recently. So yeah, all I'm saying is that there's a lot of new faces around here, and probably many of them aren't making their buying decisions in the most rational manner. By the way, there's nothing wrong with being new, especially if you're eager to learn. I love that about you, and if you haven't subscribed yet, please do subscribe because I've got a lot of stuff that I want to share with you. And also, there's nothing inherently wrong with being a Robinhood user. I'm sure there's plenty of Robinhood users that are taking a rational approach and not just out here gambling. Even myself as a kid, I was initially attracted to trading before I learned better and became an investor. All of this is just to say that because this is how stock prices are determined, it means that stock prices do not always perfectly and efficiently represent what the stock should be worth. There's a difference between price and value. So the beauty of all this for investors, and I'm gonna make a couple different points now for each of the different types of investors watching this, but the beauty of this for individual stock pickers, value investors like myself, not traders, I'm not talking about traders, just investors. The beauty of this for them is that although more often than not, the inefficiency of the stock market will mean that stock prices are bid up to irrationally high levels, way too high for the likes of value investors that think about shares of stock as the ownership interest in a business that they are. This inefficiency can also cause stock prices to sometimes be irrationally low. So low that for the value investor who's aiming to buy shares at prices below their intrinsic value, it feels like stealing candy from a baby, or whatever that expression is. It feels like you're getting away with stealing or something. It's not always one extreme or the other, by the way. Stock prices are often fairly priced too. It's just that they're not perfectly efficient always. Let's go back to this example for a second though. And we've highlighted the number of shares that are traded daily on average, the average volume. And what we've said is that these are the people determining the stock price. Now let's look at the volume on the most extreme day earlier in 2020 when the market was panic selling. So March 23rd, 2020 was the lowest point of this stock's price during this little crash. And on this day, the volume was 336 million shares. And that number is adjusted for the stock split that happened in August too, by the way. So 336 million would look like this. About 34 of these little stock certificates should be highlighted. So in other words, from looking at this, even on one of the most extreme days, it was still a pretty small percentage of the owners of Apple that were the ones setting the price and that traded it down to this price. And I'd be willing to bet as well that there were many more sellers that were selling out of all their shares to a much smaller number of buyers that were buying up all the shares being offered at these low prices. Let's talk specifically now for those of you watching this that are using the dollar cost averaging consistent approach to your investing. Remember at the beginning I gave the Mike Tyson quote, I said everybody's got a plan until they get punched in the face. Well, this information that you now have, which in summary is 1, stock prices are set by the people doing the buying and selling. 2, in relation to the total number of owners, it's a pretty small number of them that are actually dictating the price. 3, many of them aren't making their buying and selling decisions based on completely rational logic and detailed analysis, which means that 4, stock prices do not always perfectly and efficiently represent the true intrinsic value of a stock. It means that you're now armed with knowledge that will give you an extra layer of confidence if and when the market decides to start throwing some punches. And this deeper level of understanding that you now have about why stocks go up and down will hopefully help you to remain chill and stick to your plan while everyone else is panicking. Benjamin Graham, Warren Buffett's teacher, wrote this book, The Intelligent Investor, and Warren Buffett still to this day continually says that chapter 8 of this book contains one of the most important principles for new stock investors to understand before anything else. And I made a video specifically about this chapter of this book that I think you should watch next. Also, please comment below if you have any questions or if there's any topic you'd like me to cover in a future video. And like this video if you haven't already, and consider subscribing because I have a lot more that I want to share with you. And remember, I'm not a financial advisor. I'm just someone who loves investing and I've spent a lot of time learning about it. So definitely don't take any of my content as financial advice. It's not financial advice. And if you'd feel more comfortable speaking with a qualified professional in your area, you should definitely do that. Thanks for watching, and I'll see you in this next video.